What's up, guys? Tucker here. Thanks for dropping by. Today's Sunday, March 6th, 2022. And this is our markets look ahead. You must have heard a ton of YouTubers expect a bear market soon. We think they may be wrong, and here's why. Before we begin, let's follow the advice of our lawyers, in case there's a bad guy out there. Let's begin by giving our take on this whole thing. There's talk out there that we're permanent bulls. Well, guess going by the name of our channel, it's easy to assume that. But let's say one thing. We're simply investors, seeking profit, and in this market right now, shorting is very risky. Some experts claim the bear market is upon us. Note something. These are the same experts that have been calling for a market crash for over a decade now. They have been wrong all through. Yet, folks still take them seriously. Humans are amazing, right? You have to wonder what is wrong with some people. Like how you see your beloved experts get it wrong over and over again. Yet, you believe this time is different. You join the bandwagon, lose some money, miss out on opportunity. Then go back and repeat the whole process again. Unbelievable. Make it up. In any case, let us look at the basics. What really is a bear market? What is a market correction? And what is a pullback? Though we've covered this in one of our previous episodes, let's go over it again. First, you already know, markets never go all the way up, nor all the way down. They are bound to pause along the way. Take a break, so to say. That said, when a market reverses about 5%, you have a pullback. When that reversal is about 10%, it's a correction. If that reversal gets to 20% and lasts over 2 months, then you have a bear market. And what does history tell us? Since 1945, the S&P 500 has had only 11 bear markets. Let me repeat that. Since 1945, the S&P 500 has had only 11 bear markets. Yet, think about how the average investor is obsessed with the idea of a bear market. Perhaps it comes from the need to feel smarter than their peers. So everyone wants to feel like they have spotted the top, like they can suddenly tell the future. Yet, the market continues to go higher. Yet folks keep listening to these crooked millionaires who sell fear to enrich themselves. Does it mean we are saying the market can never crash? Hell no. But when you think of the statistics, you realize that these prophets of doom have a greater tendency to be wrong than right. When you pay attention to the details, you see something unique in their strategy. It's shocking. When the market is high, they say don't get in. It's too high. When the market drops, they advise, don't get in. It's going lower. You listen to them. You lose money. But they had to explain why it will happen next time. However, here, we're not in the business of calling tops or bottoms. It's a very reckless game. You can be lucky a few times doing that. After all, even a broken clock can tell time correctly, twice in a day. But does that mean you enjoy having a broken clock around? Well, guess seeing how much these experts continue to spread fear. People enjoy that. Enough of that. What are the fundamentals showing for this week? First off, the 10-year yield came down last week. It means we are on track. We are going higher. Period. The stock market depends solely on the debt market. You've seen it for yourself. No amount of bad news seems to shake this market. Think about it. Even shutting down the whole world for a year, destroying businesses, shutting people in. Nothing stopped this market from rising. Yes, we had a correction, but that was it? Just a correction, not a bear market. Instead, we went on to set record after record, high after high. Hence, we strongly doubt this war in Ukraine will bring this market down. You have to understand that everything is crafted. Sound like a conspiracy theory? Hope not. Just look around you. How free is the so-called free market? Is your cost of money determined by the free market? Don't you have a Fed that sets interest rates? Once 2008 happened, they changed the game. Our leaders need crises to keep asking the Fed to print more money. Hence, there will always be a crisis after another crisis. That's how it goes. Look at the recent past. First, we were told we would all die from some weird illness. Now, all the talk is gone. See how they moved away so quickly from that. Now, the new one is we all gonna die. There's the potential of a nuclear war. They'll keep building on that narrative. See how they play it. So, because of this emergency, the government will need to demand from the Fed to print more dough. And print. They are. Last year, the S&P 500 gained daily for about 3 weeks nonstop. So, a pullback is understandable. But a crash? Nah. This market will continue to rise until it doesn't. And when that time comes, the signs will be obvious. First, appearing in the 10-year yield. Our leaders need crises to keep asking the Fed to print more money. Hence, there will always be a crisis after another crisis. That's how it goes. Look at the recent past. First, we were told we would all die from some weird illness. Now, all the talk is gone. See how they moved away so quickly from that. Now, the new one is we all gonna die. There's the potential of a nuclear war. They'll keep building on that narrative. See how they play it. So because of this emergency, the government will need to demand from the Fed to print more dough. And print. They are. Last year, the S&P 500 gained daily for about 3 weeks nonstop. So, a pullback is understandable. But a crash? Nah. This market will continue to rise until it doesn't. And when that time comes, the signs will be obvious. First, appearing in the 10-year yield. If the 10-year yield is relatively stable around the 2% mark, we all good. If it drops, better still. Just expect tons of volatility. So, for this week, we'd expect a ton of volatility. If you've not heard, the Ukrainians accused Russia of violating the ceasefire agreement yesterday and bombing civilians. Today, Russia likens sanctions to war. Meanwhile, Ukraine continues to ask for more sanctions on Russia, claiming what has already been put in place is insufficient. But the West is hesitant to intensify it, because Russia supplies 40% of the energy needs of Western Europe. Meanwhile, Shell defends her decision to continue buying discounted Russian oil. And some dock workers in the UK refuse to offload shipment because it came from Russia. All these spell one word: uncertainty, uncertainty, uncertainty. And you know, the market hates that. Throw into this mix the expectation of the U.S. inflation data this week, which we guess would be abysmal. Hence, investors must be bracing themselves for yet another volatile week. But we still believe these are the best times. Do your own research. Some of you may choose to short this market this week. You may be lucky. Everything looks like you would. However, in an overall bull run, going opposite the trend is very risky. We don't predict tops nor bottoms. It's a loser's game. And those who tell you they can tell are lying and robbing you. Do your own research. However, did you think you have some cash to spare and you won't have a heart attack from volatility? There are a ton of great deals to be made this week. The banks were hammered last week. They could continue to trend downwards. It's on sale, buddies. Go in if you can. This is not financial advice, but recall there's a reason it is the market. You get paid for taking risk. Calculate that risk well, and go in.
As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every U.S. market day, so please be at liberty to check out our other videos. It really means a lot to us. Thank you.